About 2 weeks ago, on a silver forum that I frequent, a contributor posted the following meme, basically daring other silver stackers to give their most pointed arguments over silver bullion not being currently undervalued. My favorite of the 256 comments was this one, which read, "It's not that I'm buying silver because I'm investing for the price to go up. I'm buying to protect me when the value of paper money goes down." Hello, this is James Anderson for SD Bullion, and we're going to dig into the current day case for silver as wealth preservation first, enhancement next. This past weekend, private Federal Reserve Chairman Jerome Powell went on CBS 60 Minutes to make the case to its mostly elderly viewership that all is well thus far with the $6.21 trillion in fiat US dollars that they've drawn out of thin air, and now US lawmakers need to do more than just the mere $3.3 trillion fiscal stimulus they've already committed. The following clip was played over and over again on social media this week, and it's become difficult to believe that the Federal Reserve is not trying to ruin the general confidence in our fiat currency, saying things like this on national television shows.
Well, there's a lot more we can do. We're not out of ammunition by a long shot. No, there's really no limit to what we can do with these lending programs that we have.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
Here is this viral fiat currency creation tally thus far. I'll give you a moment to take in these figures. The following charts cover the Fiat Federal Reserve Notes M1, M2, and M3 supplies since this full fiat financialization era began some 50 years ago. Notice the unprecedented rates of change recently, pointed out by the green arrow, as fiat currency creation ramps in the bottom right corner for each chart. The price of silver has been tightening of late, and even the spot gold-silver ratio has recently dipped below 100. This longer-term gold-silver ratio chart puts this recent spike into context, and two, it shows the current heights that silver's outperformance against even gold may be falling from this decade and potentially into the next. The world's most often bought silver ETF is called SLV. It's recently already seen nearly 150 million silver ounces added to the fund's supposed underlying silver warehouse deposits in about half the time it took to complete the same feat, from the $9 silver spot price late in 2008 to the $50 an ounce high in early 2011 for silver. If this and other silver bullion investment demand in the face of unprecedented fiat currency creation keeps going at this rate, there's no way silver spot prices are going to stay much longer in their polite $15 to $20 an ounce range that they've traded within for basically the last 5 to 6 years of time. Today, we're again seeing strange divergences between the London spot price for silver versus the highest traded front month COMEX silver futures contract price. Throughout this month of May, there has again blown out another divergence in price between the two major silver price discovery markets. Finally, we will end today's market update with a look at the East versus Western silver price divergence throughout this full fiat currency era. About a year ago, I did a video entitled "When to Sell Silver, Best Time to Sell Silver," in which I described when, by using that chart looking backwards, that a silver bullion stacker might have benefited by selling off some profitable silver investment holdings and to potentially use those proceeds for other investments, etc. Well, in the last year, the Eastern price for silver has increased nearly 50%, over $37 per ounce since that video came out in the middle of May last year. My contention on this price divergence chart remains that the Western red and Eastern blue lines will converge again at some point. Likely by then, the value of silver will have multiple manyfold. Perhaps by then, too, it will be time to look to reallocate some of your silver purchasing power elsewhere, as the gold-silver ratio will likely have tightened back towards, and possibly beyond, the 2011 low of 33. But hey, that's just me. I've been buying silver patiently, waiting for its value to multiple manyfold, as well as protect me when the value of our national fiat currency goes down further. What's your reasoning at this stage in the game? Let me know in the comments below. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.